You have heard about moving averages. Everybody use them. But what if I tell you there's a secret way to use them that most traders completely miss? It is simple, it is powerful, and probably it is the reason why smart traders keep winning. In this video, I'm going to show you how to use moving average like a pro. I'm going to show you what they don't want you to know about moving averages and how to use moving averages to become a profitable trader. I'm James. I'm a forex trader and I'm here to teach new traders how to trade like pro. All you have to do is to click the subscribe button, turn on the notification bell, and like this video so you can get notified whenever we drop a new video like this. And also, don't forget to join our community on Telegram using the link in the description of this video. There we share more trading tips, more trading guides that can help you become profitable. So use the link in the description of this video to join our community. Now, without further ado, let's jump in. I have divided this video into two parts. The first part is how to trade using moving averages. Whether you're a swing trader, a day trader, a scalper, any type of trader you are, this video is for you. And the second part is what they don't want you to know. This is the hidden part everyone should watch. So this part exposes everything you need to know about moving averages and how to use them to become a profitable trader. Now let's jump in. But before you do, let me make this announcement. I have documented a simple and approved strategy for trading XAUUSD. So if you want to be a professional gold trader, check the link in the description of this video. And also, if you want a complete mentorship class where we teach how to become a forex trader from the beginning to the end, also make sure you check the link in the description of this video. Without further ado, let's jump in.
So there are three major ways to trade using moving averages, and we are going to discuss them now and at this spot. So the first way is to use moving averages to identify the trend of the market. There is a saying, don't trade against the trend. If a trend is uptrend, it means that big institutions are always buying. So you look for buying opportunities. If it is a downtrend, it means that the big guys are selling. So you look for selling opportunities. But if it's a sideways market, you look for both. That is for both buy and sell. Okay? So to identify the trend of the market using moving averages, you can use one moving average or you can use two moving averages. What I mean is you don't need two lines in the market. Like you can see in my chart now, I'm using just 50 moving average. I don't use 50 and 20 or 50 and 200. We are going to discuss why you need two moving averages. But on this example, trying to identify the trend of the market, you can use one moving average. Okay, so this black line you can see here is 50 exponential moving average. You can still use 50 simple moving average. Okay, the choice is yours, but I prefer exponential moving averages. So how do you identify the trend of the market using these moving averages? It is simple. You have to make use of the higher time frame, like the daily time frame or the 4 hours time frame or 1 week time frame or whatever, depending on the trader type you are. So as you can see, if the price is above the moving average, okay, I repeat, if the price is above the moving average, as you can see from this chart, the price is above the moving average. And what? And the moving average is sloping upward. This means we are in uptrend. It is simple. It is very, very simple. Okay, so you understand that this is uptrend. So you always look for buying opportunity. So let's check another chart and another time frame. This is XAUUSD 1 day time frame. So let's check another currency pair. So again, this is USD JPY on 1 day time frame. As you can see from this place, the price was below the moving average from here, and the moving average was sloping downwards. It means the market is in downtrend. Okay, so you look for selling opportunity. Remember, if the price is above the moving average, it means uptrend. But if the price is below the moving average, it means downtrend. And you can just look, you can do this using the higher time frame. Okay, and also if it is uptrend, you look for buying opportunity. If it is downtrend, you look for selling opportunity. From this chart example, USD JPY 1 day time frame, as you can see, this is correct downtrend. So any setup you are looking for is selling setup. If you go to the lower time frame like 1 hour 50 minutes, just keep looking for selling opportunity. Now, how do you trade moving averages bounce? Moving averages bounce is very simple. It means that whenever the price is bouncing off from the moving average, then you have your buying or selling opportunity. Let's assume that this is the price, okay? And if the price is bouncing off from a major moving average, it means you can look for buying opportunity here, you can look for buying opportunity here, you can look for buying opportunity here. Because these moving averages, sometimes they act as dynamic support and resistance levels. So whenever the price bounces off from a moving average, then you can find your buying or selling opportunity. Now let's check it out on this XAUUSD using these two moving averages. You can still use one moving average as we discussed earlier. I'm going to show you when it is very necessary to use two moving averages, but now let's just continue with two moving averages. And as you can see, if we zoom in, the price here was above the 21 moving average. Now what happened? It tapped into the moving average. It tapped into the moving average, and what? Boom, it started rallying up. What you have to understand that is that if the moving average is sloping upward and price is above it, we are in uptrend. So anytime the price retraces back to the moving average, you look for what? Buying opportunity. If you find like bullish engulfing bar, okay? As you can see here, the price traced to this 21 and 50 moving average. And if you look closely, you'll see a very bullish engulfing candle. This shows that this point is a dynamic support level. So whenever you see this, you can just look for buying opportunity, or you can just enter the trade immediately. This is it. The price just tapped, retraces back to moving average and produced a bullish engulfing bar. Once you see this bullish engulfing bar, what happened? You're supposed to just enter the trade. Your stop loss should be below this low, and your TP should be at least 1:3, 1:2, or whatever risk to reward you want. Okay, that's how to trade using moving average bars as support or resistance levels. Okay, now can we try again using another currency pair? This is USD JPY 1-day time frame. Okay, so the question now is, must I use two moving averages? No. So for moving average bounce strategy, you can just choose to use one moving average or two. Here we are using two moving average. Okay, now as you can see, this is USD JPY day 1 time frame. That's 1-day time frame. The price was below the moving average. Okay, so the price was below the moving average and the moving average was sloping downward. That is what's downtrend. So we look for selling opportunity. Since we know we are looking for selling opportunity, just wait for the price to retrace to the moving average. Like here, we have the price retrace to moving average, and we have what? Bearish engulfing bar. We have what? Bearish engulfing bar. So once you saw this bearish engulfing bar under the moving average, okay, just place your sell order here. Your stop loss should be below the low, and you can hold until you find a trend shift, or you can target at least 1:3, 1:2 risk to reward. I repeat, this is downtrend because the moving average is above the price. That's the price is below the moving average, and the moving average is sloping downward. Just wait for the price to pull back to the moving average like it did here. Look for selling opportunity. Again, the price pulled back to the moving average, produce bearish engulfing bar. So you what? Look for selling opportunity here again. It is simple. This is called moving average bounce. It is because moving averages work as support and resistance levels in a trending market. Please don't use moving average in a ranging market. Ranging market means that the market is not in uptrend and it is not in downtrend. It could mean that the market is bouncing off from a support and resistance level this way. If you see any market like this, please don't use moving averages there. So let's discuss the most effective strategy in this moving average. Okay, it is called moving average crossover. This happens when one moving average crosses above or below the second moving average. This means that you need two moving averages. Okay, so the first moving average should be the long-term moving average, and second moving average should be the short-term moving average. Here we have the blue one is the short-term moving average. It is 0.1 moving average, which is recommended for day trading. Second one is the long-term moving average, which is the 50 moving average, which is recommended for support and resistance level tracks. Okay, now as you can see here, these two moving averages are sloping upward, which means uptrend. But how could we have caught the beginning of this uptrend? It is by the use of moving average crossover. It happened here. Okay, it all started here. So when the short-term moving average, here we have it as 0.1. When it crosses above the long-term moving average, then it means bullish crossover, which is also called golden cross. As you can see here, the short-term moving average crossed above the long-term moving average and the price was above them. It means that here the trend have shifted to be bullish. So it is called bullish crossover or golden cross. So whenever you see the short-term moving average cross above the long-term moving average, it means that the uptrend have started. Okay, so you can just enter the market once you see the bullish crossover. Okay, and your stop loss should be below the low, and you can hold because this is the beginning of what? The beginning of a new trend. Remember, you can use this on any time frame, but here we are using it on 1-day time from XAUUSD. So let us check another currency pair, maybe USD JPY. So this is USD JPY 1 day time frame. Remember, when a short-term moving average crosses above the long-term moving average, it means bullish. Okay, that is bullish cross, and you can also call it golden cross. But what if the short-term moving average crosses below the long-term moving average, like we have here? Remember, the blue one is the short-term moving average, 21 moving average, and the black one is the long-term moving average, which is the 50 moving average. And as you can see here, the short-term moving average crossed below the long-term moving average. This means that the trend have shifted from here, which was bullish before. Then from here, we have it that the trend have shifted to be what? Bearish. And from here, you can put your short position once you see the dead cross. Okay, a bearish crossover, that means a bearish crossover is called dead cross, but a bullish crossover is called golden cross. So we have here dead cross. Once you see the dead cross, you can put your short position and you can hold, since it is the beginning of a new trend, or you can target at least 1:3, 1:2, or whatever breaks to the word you want. But my response is, please don't be greedy. So we have seen how to use moving average to identify the trend of the market, how to use moving average to find potential buy or sell bounce, and also how to use moving average crossover. If you have any question, please indicate in the comment box. Don't forget, we have community where we share all these trading tips completely for free. And also, if you need a complete mentorship class of how to trade XAUUSD or any currency pair from the beginning to the end, then check the link in the description of this video. Don't forget, we are here to help you become a profitable trader. So don't hesitate to drop any of your opinion, any of your question, any of your confusion in the comment box. See you at the top. Goodbye.
Now, this is the part 2. And this part 2 is what they don't want you to know about moving averages. Many people say that moving averages doesn't work. Many people say it works. But you have to understand that strategy alone cannot make you profitable. Any strategy you use in the market, provided that it works, it can make you profitable if you can manage your risk, if you can control your greedy, if you can control your psychology. So it means that moving average works, but not all the time. Also keep in mind that no strategy works all the time. Moving averages does not work all the time. Support and resistance levels does not work all the time. SMC does not work all the time. No strategy works all the time. That's why you need to apply appropriate risk management. But at this point, I'm going to show you a simple way to use this moving average to become profitable. I know a profitable trader who is using this moving average and he is in consistently profit every day. Now, this is it. Don't trade moving averages in isolation. I repeat, don't trade moving averages in isolation. That is, don't just go buy because the price is rejecting moving average, or the price is bouncing off moving average, or the price crossed over moving average, or the price is above the moving average. Don't just go buy because the lower moving average crossed below the higher moving average. No. You can apply other confluences like support and resistance levels, Fibonacci levels, fair gaps, other blocks, or whatever confluences you have. That means the secret is don't use moving averages in isolation. You can use moving averages to identify the trend of the market, but if you want to go buy or sell, look for other confluences that you can add to this moving average so you can come out profitable every time. Also, don't forget that I have documented many proven strategies that can help you become a profitable trader and also a profitable gold trader. So use the link in the description of this video to join our community, or use the link in the description of this video to get some of these PDFs that can help you become a profitable trader. I'm here to help you become a profitable trader. That is my goal. So if you have any question, don't hesitate to drop it in the comment box. Now, thank you for watching. Goodbye. Good luck. See you at the top.